Hey, folks, welcome to Market Intraday Analysis by InTheMoneyStocks.com, your leaders in pure technical analysis, avoiding all that Wall Street hype. Today, Friday, January 7th, 2011. Well, we are seeing some good solid downside in the market today, folks, after a jobs number that was not great, and then the dollar started to push higher, and that's really what brought the markets in. Believe it or not, we actually started higher today, even though the jobs number was not good. And the reason we started higher today was because the dollar was slightly weaker. But once we got to about 10:30 in the morning, and again, you can see that's where the pivot top was put in right here before the fall. The market started to collapse down because the dollar started to race higher. And again, it's an inverse relationship with the dollar and the markets. When the dollar goes up, markets go down and vice versa. All right, so again, let's just cover the basics for the day so far. What's going on today? And again, the big news out was the non-farm payrolls report coming in weaker than expected. The average analyst, and again, myself going into today, had thought maybe around 200,000 for the number. And the reason why was because the ADP private sector was so strong, close to 300,000. So you figured that the jobs number would be decent today. That did not turn out to be the case. 103,000, almost a miss of 100,000 on that number. However, you might say, well, why didn't the markets tank? The markets initially tanked pre-market. The futures dived, but what you ended up seeing was a recovery because the unemployment rate came in much better than expected. And you might ask yourself, well, what's the deal here? Why are these numbers so far off? That's a great question. I think a lot of the unemployment rate drop was due to December hiring for holiday sales and stuff like that. But nonetheless, the unemployment rate dropped to about 9.4% from 9.8%. That's a zero point 0.4 drop. Very, very impressive drop. And again, to only create 100,000 jobs and to see that drop is very, very positive for the market, I guess you could call that. And so the market rallied back. The jobs number, again, was kind of shrugged off. The spiders here, you can see, opened slightly higher, but right into this blue trend line. The trend lines today for scalping have worked amazingly well, probably because the volume has been a little stronger today than in previous days as well. Yesterday, you can see the levels worked very, very well today, too. Down here, bounced, and then came down, touched here again, and bounced. But today, even better. Blue line, gap up, sell off. Retrace double top to the blue line, massive sell off. You came down to the 200 moving average here. Look at the bounce. And these are, again, scalps that we took in the intraday stock chat. The 200 moving average I nailed beautifully. Again, my partner calling it out in the intraday stock chat off the 200. Look at that bounce. Then again, after you get the bounce, you move out for your profit. And again, the market collapses back down. Where does it go? The blue trend line. The blue trend line, what happens? You buy it, you get a bounce, you take your money again. Then it comes through the blue trend line, goes to the next trend line down here at the low of the day, 126.15, and look at the bounce that ensued. And a huge bounce this time. Most likely the low of the day is in because you have a bottoming tail intraday. I don't know how much higher we'll go or if we're going to float sideways, but nonetheless, I do believe the lows of the day are in down here. But not, just great scalping opportunities today. Good money being made in the intraday stock chat on the spiders. The last week or so in the intraday stock chat has been more small cap and the occasional large cap scalp and spider scalp, but more so small caps have really been amazing. Today we're seeing the spiders, the large caps being much better in the scalping wise. Now, if you're in the research center, you know that there were some key calls put out. Again, we've seen a reversal key on Amazon. Amazon on the high level reverse, that's been on the bearish pro trader watch list. In addition, ExxonMobil, which is still slightly strong, but it looks like it may be near a top. One of the best calls today over the last few days was U.S. Steel. U.S. Steel, folks, was called out on the bearish pro trader watch list over $60. It's now trading at 56, got as low as 55.67. And again, we removed that today from the bearish pro trader watch list after it gains $4 in about less than a week, anyways. A big, big drop on U.S. Steel. Beautiful profits to be made. So again, the profits are there to be made. It's just a matter: are you a member of the research center or the intraday stock chat? Both are making money, just a matter of if you're doing it on a scalping basis or a swing trade basis. The question again is, are you a member? Are you making the money that you should be making in this market? It's a great trading market right now, folks. Even though volume's been light, it's a fantastic trading market, and you want to be involved. By the way, hidden gem on Monday. I repeat, hidden gem alert on Monday. Hidden gems have been notoriously big runners. We're talking 100% gainers oftentimes. I give a general target of it a 50% gainer, but you need to be involved. Monday, the hidden gem will be released. And again, we're talking some big gains here over the coming months on these hidden gems. You need to be involved. These are huge, monstrous gainers. All right, let's go back to the SPY, touch base on that. Again, look at the bounce. It goes right into this level. Why is this resistance here? Because it's confirmed below. For those of you that are Research Center members and Intraday Stock Chat members, you know confirmation, right? Here you close below, there you confirm. Therefore, on a bounce back to the blue line, there's going to be a little bit of resistance. We'll see if it holds down more than just this little pullback. It may pull back a little bit more. Otherwise, you're going to go for the 20 moving average, which will be the next spot for shorting of the market today. Okay. Again, a very nice rollover. If we look at the 60-minute chart, the market has really given up a majority of its gains of the week so far. Here you have the third right here. We're not down to the full amount, but at the low of the day, we were very close. This is the gap fill for the week, and this is where the low of the day was. We've now bounced. Notice how we're bouncing back on the 60-minute chart to the 50 moving average, which again is signaling some good support around that area. So again, I think the lows of the day are in. I really do. At this point, we'll see if I'm right by the end of the day. You want to again be involved as we're going to continue to release more trades in the Research Center, more trades in the Intraday Stock Chat. And again, it's just a matter of understanding basics, and you'll make money as long as you have discipline. I mean, it's really not that hard, in my opinion. I've been doing this for years now. I've seen members in the Research Center and members in the Intraday Stock Chat become pros, literally pros, by using our methodology for a year or so, and again, becoming expert traders where they have to do nothing else but swing trade the market or day trade the market and make a living, and a very, very big living at that. All right, now let's just go over the dollar. As I mentioned, the dollar, folks, the dollar is really the big catalyst here. See how the dollar again bottomed, and this is initially, remember the markets early in the day kind of held up as the dollar was falling, and then the dollar caught this bid, moved up, and that's why you saw the markets tank. Again, you add the not so great jobs number to the mix, you add a dollar that's moving higher. It's just too much for the Fed to really prop up at this point. The Fed's been propping the market with POMO, which again is QE2 divided into individual days. Therefore, it's called POMO on an individual day basis, but they've been using that. They continue to use it, but when the volume inches up a little bit, it just makes it too heavy for them to prop up. Volume on the Friday afternoon now is most likely going to be light enough where they can probably keep the market from going any lower at this point in time. Let's take a look at some of the other charts. How is the USO doing? USO is down 25 cents. Really not that big of a drop today, although it looks bigger because it was up, but it's not that big of a drop at this point. The GLD, touch base on the GLD. GLD is only down 30 cents. So really, the two commodity ETFs that we follow, gold and oil, they are down, but they're not down that much on the day. And again, I think we're going to go into snooze fest for the rest of the day, most likely, with a neutral to slight upside bias, possibly from where we currently sit. Stocks to watch, what are they? I continue to be a big fan of the solar stocks, and I've been dead on here. I gave these out to the Research Center a few days ago over the last couple days, and again, I even think I mentioned them in the free video here, and one of them is my favorite, SOLF. Great base hovering right here. And again, what you have to enjoy about this is the market's getting hit decently hard today, with the Dow down about 57 points, NASDAQ down 20, S&P 500 down 7.5. And this stock, SOLF, is actually up 4 cents on the day. Was as high as 851, but has come in obviously on the weak market. But as long as it's holding positive in a weak market, that's a very impressive sign. JASO is another one of my favorites here. I like the consolidation above the 200, above the 20 moving average. A pop to the 50 is likely. And then again, a couple other stocks that I'm watching. DRL is an interesting one here as it pulls back into these moving averages. A small cap financial, and PCBC is another favorite of mine as it's hovering a long base with a possible target of the 50 moving average to the upside on any sort of pop. So watch these. Again, those are the ones I'm watching here on the afternoon of this Friday today, as again, the first week of the 2011 trading year comes to a close. It's been a great first week so far, just like it was a great end in December with huge profits on small caps and large caps, and it's only going to continue, folks. The methodology works, the methodology that we teach to you and give you plays off of, and again, 80 to 90% success ratio on calls. There's really no one out there, not even hedge funds, are doing that type of return. Take care. Have a great afternoon, great weekend. I'll talk to you this weekend. Take care.